Hey everyone, welcome back to Corporate Decoder, the place where we figure out what companies are really up to. Today we are diving into a report from Fathom Holdings, and let me tell you, their stock price might be taking a nosedive, so let's see what's going on and why they might be in a bit of trouble. Fathom Holdings just filed a Form 8K, which is basically a quick update for investors about important events. In this case, it's a notification that they might get kicked off the Nasdaq Stock Exchange. This is never good news for a company or its investors. The big issue is something called the bid price rule. Nasdaq, the stock exchange they are listed on, requires companies to maintain a minimum stock price of $1 per share. Fathom stock price has been below that for 30 days straight. Think of it like a store not selling enough and the landlord threatening to evict them. They have until October 13 of next year to get their stock price back up above $1 for at least 10 consecutive business days. If they manage to do that, Nasdaq will send them a "you're good" letter and everything goes back to normal, at least for now. But what if they don't get their stock price up? Well, they might get a second chance. To get this extra time, they have to meet certain requirements, like proving they are still a viable company in other ways. They also have to tell Nasdaq how they plan to fix the problem, and sometimes that means doing something called the reverse stock split. A reverse stock split is when a company reduces the total number of its shares. For example, imagine you own 10 shares and they did a 1-for-10 reverse split. You would then only own one share, but each share would be worth 10 times more. Companies do this to artificially increase their stock price, although it does not fundamentally change the business or its value. If they can't fix things, Nasdaq will send them a delisting notice, which is like an eviction notice. Then Fathom can appeal, basically asking Nasdaq to reconsider, but ultimately they could be kicked off the exchange, which would make it harder for investors to buy and sell their stock. Right now, their stock is still trading on the Nasdaq Capital Market under the ticker symbol FTHM. The company says it's looking at all its options to get back on track. However, there's no guarantee they will succeed. The report was signed by Marco Fraginal, President and CEO of Fathom Holdings. Now, let's zoom out and see what this all means for Fathom Holdings. It is never a good sign when a company is at risk of being delisted. It suggests the market has lost confidence in the company. This could be due to many factors such as poor financial performance, a struggling business model, or negative news. Fathom needs to act quickly to regain investor confidence and get its stock price back above $1. It might involve improving their business, cutting costs, or finding new sources of revenue. If they can't do that, they might have to resort to a reverse stock split, which is often seen as a last resort. Overall, this report raises some serious concerns about Fathom Holdings. While they have time to turn things around, they face a significant challenge. It will be interesting to see how they respond and whether they can avoid being delisted from the Nasdaq. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings and business news.